It's about that time of day again. My name is Joseph. Wednesday evening, August the 8th. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities setting up for tomorrow's trading session. And tonight, I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude oil is bearish with a strong spike lower today, which often turns sideways into a spike in range the following day. That tells me to look for selling opportunities using a two-legged pullback, and I've got my eyes on a key battle zone for tomorrow morning. About the S&P is bullish with its own trading range tonight. That tells me to focus on failures, use that two-try rule, and look for buying opportunities off the prior month high tomorrow morning. Nasdaq is bullish. Nasdaq still trying to get to that prior month high. Nasdaq also has a trading range of its own tonight, and I have my eyes on a key support trend line for buying opportunities using the two-try rule tomorrow morning. Definitely an interesting chart tonight in the Nasdaq, so make sure you stay tuned for more on that. Gold, can't forget about the yellow metal. It's bearish with a trading range tonight, and I've got my eyes on the high of a hidden channel for selling opportunities tomorrow morning. And last but not least, the euro is bullish with a range-bound market once again today. So my plan is buying low, selling high, avoiding the middle, and watching for those failure patterns on Thursday morning. Well, as you can see, we got quite a few trading ranges on the chart tonight. It is summertime season after all. And when it comes to ranges, the secret to success is all in the market's context, which is exactly what I'm going to be focused on in this evening's newsletter. And as always, I got a great video for you guys and gals tonight. We got plenty of reliable trading opportunities setting up for tomorrow's session. But before we jump into those charts and put the plan together, I need to remind you, if you're watching me tonight on YouTube, you can find a detailed description of this entire trading strategy written out right here on my blog at sidewaysmarkets.com. I'll leave all the links in the description of the YouTube video tonight. Also, if you have any questions about anything covered in this video tonight, please remember to post them in the comment section below. And if you like what you see, please help support this channel by subscribing, and make sure you hit the bell icon when you subscribe to make sure you get notified every time I post another video. Oh, and don't forget, if you really want to stay in tune with everything we do here at School of Trade, head over here to the blog at sidewaysmarkets.com. This is where all the action happens every day, and make sure you join our mailing list. Promise never any spam, only the good stuff coming to you every day. Give me your name and your email address, and I'll send you an email every time I publish something new. Also, if you're on social media, StockTwits, Twitter, Facebook, LinkedIn, whatever your favorite social media channel, I post exclusive content, stuff you won't find anywhere else on the interwebs. If you're on the socials, follow me in the lower left-hand corner. And don't forget, grab all those charts from tonight's video. How easy is this? Boy, on a silver platter for you, right? All the charts from tonight's video, have them ready on your computer for tomorrow. Grab those charts and be ready for tomorrow below the video on the blog. And speaking of tomorrow, I've got a session for you. Free pass, upper right-hand corner. Are you a member here at School of Trade? You want to be a member? Do you want to know what it's like to be in our trade room? If you're not a member here at School of Trade, grab that free pass, upper right-hand corner, and come join me as a guest in our trade room. And again, as I mentioned earlier, if you got any questions, drop those questions in the comment section below for me. While you're there, give me a thumbs up if you enjoy my videos. And don't forget, you can always hit me up on live support if you have any questions, guys. Always looking forward to answering all your questions. Let's get started here tonight. We got a busy schedule here for tonight's newsletter. And as always, I appreciate your valuable time. Thursday, August the 9th, that's just right around the corner here. And tomorrow we finally get into some of that big news that we were kind of teased with earlier this week, right? If you remember, right, this second week of the month, there hasn't been a lot of market moving events yet this week. Monday was empty, Tuesday was empty, with the exception of the inventory report. Wednesday, pretty much empty. And I've been teasing you guys, right, with these inflation numbers coming out tomorrow and, of course, on Friday. So tomorrow, right, we get inflation numbers, the PPI number, right, the producer price index, right, producer prices, which eventually get passed down, right, to consumers. That is inflation. And whenever we talk about inflation numbers, we always think currencies and gold, right, and metals. So currencies, euro, CAD, Aussie, Swissy, right, all the currencies. My favorite, of course, is the euro. We'll talk about that in just a moment. And, of course, the gold, right, gold, silver, copper. I don't think palladium's going to be too liquid for you, right, but you want to stay on their radar tomorrow regarding, right, any of those metals, right. So tomorrow, 8:30 Eastern time, as I always kind of joke around, jobless claims hasn't been a market mover for 10 years now. It's all eyes on that PPI number. It's all eyes on that PPI number tomorrow morning at 8:30 Eastern time. That will get us started tomorrow morning. Don't forget, 8 o'clock Eastern time, we'll be in our trade room with all of our advanced members. Hope to see you guys right there with me. Let's jump right in. I got a lot to cover here tonight. We have a bunch of ranges on the chart tonight. I'm going to dig into those in just a moment. The only market that didn't spend pretty much all day today sitting inside of a range pretty much did the exact opposite. It got clobbered, right? Crude oil, we're bearish tonight with a strong move lower, a measured move, right? And the prior month low on the chart this evening. Again, like I said, crude oil got slaughtered today. Big move down. Remember, the weekly inventory report was this morning. It's always a big variable, right? If anybody tells you they know how big these moves are going to be before they happen, they're either naive or they're lying to you, one or the other, because it's always kind of a coin toss on Wednesday mornings. Today, though, definitely took off the downside and never stopped moving lower. Now, that strong move down is a big clue. The strong move down tells me the odds of a deep pullback and retest of the low are very high, right? Strong move down, deep pullback, retest of the low, right? That is a very high likelihood. It also tells me that anyone who is waiting for, right, that deep pullback, right? Any sellers who are waiting for a move up to sell back down, they are still waiting right now. If the market gives them that pullback, we can expect those sellers to be waiting right there tomorrow morning to sell it back down. Another thing to remember is that when a market moves this much in such a short period of time, the following day is oftentimes a range. So I'm going to keep my eyes open for a potential spike in range pattern, right, tomorrow morning. And it's easy to see where they wanted to go, right? They get a measured move down there, 66.31. The prior month low is sitting there, for crying out loud, right? 66.29 down there, right? So you can definitely see where these guys were trying to send this thing. The market's pinned to its lows right now, right? And the best way to trade it is to wait for that pullback, wait for that retracement, wait for that correction, let the buyers try to grab the reversal and sell into their failure on the way back down to the low tomorrow morning. Looking at the chart right now, it's easy to see we're bearish. And again, like I said, right, the odds of going up and then eventually coming back down are very, very high. So really at this point, there are maybe four different scenarios that I need to be ready for tomorrow. Scenario one, if I get my hotkeys working here, scenario one is going to be a move up, right, and then back down. Scenario two would be a move up that holds and reverses. We definitely want to be aware of that potential tomorrow, because let's not forget, this whole thing is coming off of news, right? Easy come, easy go. We could find ourselves right back where we came from in tomorrow night's newsletter. So that's a possibility we got to be aware of. Another possibility is we just go sideways here and do nothing, right? And then of course, the fourth one, which is what I hope we get tomorrow, probably a little bit easier, is if we do go lower, right? What if we go lower? What's the plan if we go lower, right? That's where we're going to be looking for those four scenarios here. So scenario number one, what is most likely here right now? What is most likely here is that we're going to get a move going sideways, right? That is most likely. I've been doing this for a long time, and usually when you see a market this strong in one direction, usually the people who are still holding short, they're not going to take their profit until they see the sellers try twice and fail. So once the sellers try once and then twice and can't retest that low, then we'll start seeing, right, those bears start to take, right, some big chunks of profit and get out of this market. This is such a strong market right now that I doubt you're going to see a lot of people get out. I think a lot of folks will probably try, right, to hold on to this and, see if they can get that next leg down to that next measured move at 65.31. So what is most likely is we see this thing going into a trading range. Now, when it comes to trading ranges, we talked about this last night. It's all about market context, right? It's all market context. So if we have a trading range and the market is bearish, very important, right? Bearish going into that trading range. Now I'm looking for selling opportunities, and I'm going to do that using two types of patterns. One is going to be a two-try failure off the highs. Very, very simple. Just like the name suggests, we go higher once, we try twice, and we're looking for that failure to sell back down in, right? The next pattern uses the moving average. The moving average will come through, that's the wrong color, come through, and I want to use the low of that range as resistance, and I'm looking for a two-legged pullback. I call this the fake out, breakout, pullback pattern. So again, it's the one try, two try, right? We call this the two try failure, right? Two try failure pattern above that high. And again, it's called the fake out, breakout, pullback pattern, right? Basically, it's a breakout pullback that requires a moving average to clear below the low, and we look for that two-legged pullback. Now, remember, it's all about market context. What I mean by that is the market is bearish, right, going into that trading range. With the market bearish, we're focused on selling. Now, also very important, right, if we have a bear market, again, bear market into that trading range, I can look for, again, that one try, two try failure to sell with the momentum back down to the low of that range. Now, can we apply the same pattern here, buying off that low? Can I use that same one try, two try, basically it's a failure pattern off that high? Can I do the same thing here? Can I go one try, two try, and then back up again? Not if I'm looking for the most reliable trades. Again, it's all about market context. With that move lower going into that trading range, again, on the crude oil right now, we'll show you a couple more examples on the rest of these markets, I'm not going to have the luxury of being able to use that failure. What I'd rather do is use that high, though, find a new hidden channel here, and my goal is to buy the pullback around that low, right, around that low. Now, I know we talked about this a lot last night, but it's everywhere tonight on the newsletter, and I want to make sure I covered it tonight, especially if you're here, right, for the first time here tonight, right? So again, if the market's bearish, I'm selling off the highs using those failure patterns, but in a bear market, I can't buy off the low using the same pattern because I need a little bit more evidence, right? I need a little more strength. I need to get that market going up, but I don't want to buy the middle of the range. I want to buy the low of that range, right? Buy as low as I can. And then again, don't forget, right? If we can get through it, we can go through it with that fake out, breakout, pullback pattern, right? So buy low, sell high. It's all about the context of the market, though, before we get into that, right, into that trading range. Now, there's a lot more details that go into these trading ranges. For example, if it's a narrow range, right? If the range is narrow, the market context says I can look for small two-try failures, small range, small two-try failures. If the range is much larger, easy rule of thumb, right? Larger range, the two-try will be larger. One try, two try, right? Back in. See what I'm saying here? Right? So market context, the context, the story being told, the condition of the market. We can't just apply the same black and white rules to every single situation. Is it bullish? Is it bearish? Is it a large, wide range? Right? Remember, large range, large two try, small range, small to try, right? We have to look at each scenario specifically. Now, I just covered a lot of information in a very short period of time, and I'm doing that because I don't want you to be here all night. I want to cover all these markets for you and go over the plan for tomorrow. But if you're here for the first time today, or if you want a deeper dive into trading ranges, large, small, to try rule, fake out, breakout, pullback, I want to give you a great resource and basically a shortcut. Rather than making you go back and watch all my newsletter videos, right, to get all the good stuff, I'm going to put them all in one place. I'm going to give you a free trading course in the upper right-hand corner. I'll also put the link in the description of the YouTube video tonight, right? Grab that link. I'll be here when you come back. Don't you worry about me, and register for our free trading course. And I'm going to send you real chart examples of all the patterns, all the analysis. You're going to love it. You're going to love it. It's going to change the way you look at charts. I don't care how long you've been trading. I'm self-taught. I got a lot of things that I see differently than other traders do, and I think it'll be a great experience for you as part of that free trading course. Okay, we'll talk about that next time. Let's keep going. So now we've got that bear bias, right, into what is a relatively small trading range, right? So bear bias says, the market context says, sell high and look for a strong breakout, right, going lower, right? The size of that range isn't very large. So we don't need to look for these huge, right, to try rules. Now, another thing I'm watching here, again, is because that market had such a big, strong move down, I'd like to get a deep enough pullback to attract those bears, right? To attract those bears. How do you get sellers excited about this market again? Because right now it got clobbered today. It's almost too low to sell right now. You've got to get this market up off of these lows, right, to give those to give those sellers an incentive, right, to come back in. See, if I sell right now, my target's right here, right? There's my target. Okay, so that makes you, right, we'll call that $1 sign, right? But if we can go up around the battle zone, right, well now, heck, that's a whole lot more dollar signs, right? You can see a whole lot more profit potential if we get that deeper pullback. So that's what I really like to see, and I have my eyes on this trading range, right, combined with that prior swing. This is really where I hope we get a chance to sell tomorrow. So first things first, I expect to see a trading range environment, right, as we go sideways here, right? As we go sideways, I'm looking for that one try, two try, failure, back down in. Or moving average comes through, fake out, breakout, pullback, right, through that low. These are the two sweet spots that we're looking for here tomorrow, right? One try, two try, above that high, failure back down, right, to retest that low. Then, can we go through the low, right? That's the question. You're going to really need to see a lot of strength going through that low. That'll be your trick, right? That'll be your secret to using the underbelly of that range, right? Selling that pullback as we go lower. And if we do go lower, right, measured move at 65, right, 65.31, right, as we go lower. Now, what if prices jumps higher here, right? What if it jumps higher here? Perfect. If it jumps higher here, I'm looking for those buyers here, right? If we jump higher, sorry about that. If we jump higher, I want to see those buyers try to reverse that trend. Okay? If they can reverse the trend, we find a new channel off those highs, find that new channel, and I'll buy that pullback. This is obviously not drawn to scale. It doesn't need to be this large. The key is, though, I do want to see us go up. I want to see these buyers try to hold this pullback to the moving average, right? If they're successful, and again, please do not think this has to be this large. It's not drawn to scale, right? We'll draw up off those highs, find that new channel, and my goal is to buy off the low of that channel for a target, right, as we go higher. Now, right, if those buyers cannot hold, right, when they do buy that pullback, now we know where their stops are. And now we can sell into those stops. Don't chase after it, though. Wait now. Find that new hidden channel. See what I'm doing right there, right, off those two new lows, and then sell, right, back on that pullback. You see what I'm doing here? right? So again, it's a failure pattern, then into a pullback pattern. And again, I got literally hundreds and hundreds of hours of examples, right, of all these patterns in that free trading course, right, upper right-hand corner. Grab it while it's available here. I'll be here when you come back. Okay, so that's the plan if price goes up, right? Price goes up, 1, 2, do we reverse? We call that 1, 2, the reversal, 1, 2, 3 reversal. Do we reverse, back up, or do we get up, right? Up, failure, strength, find that new channel, bingo, sell off that high, boom, right back down, right? Failure, strength, pull back down. Now, what if we go lower here, right? What's the plan if we go lower? It easily could. You know, technically they haven't reached that prior month low yet. So if we do go back to that low, if we bounce off of it, again, range, 1 try, 2 try, back down in. But what if we really roll, right? What if we really roll through? Great. Let's take that low up to that high, and let's try to use that low, right, in with that high, right? Try to use that level as resistance. Again, target down at that 65.31 area as far as we have that measured move drawn, right, at this point. All right, guys, so if we do go lower here, I am not trying to sell that breakdown, right? I don't sell low. I sell high. It takes a little bit of discipline. It takes some patience. We wait for the price to pull back. I'm looking for a resistance level. I can use that prior swing. I can use this new channel, and I can sell down from there. All right, guys? And again, all the entry patterns are covered in that free trading course. Grab that course in the description. You won't be disappointed. Let's keep going. So now you know the reversal, you know the bulls, you know the bears here for the oil. Now let's dig into some real ranges here, because like I mentioned earlier, we got a lot of ranges tonight. We got trading ranges on pretty much everything else here today, which is fine by me because ranges are pretty easy to trade as long as you know, again, what's the market context, and we talked about the strategy earlier, right, when we introduction here today. So S&P first, then we'll go Nasdaq next. S&P is bullish. Trading range, prior month high, and a key reversal line, right, down around 45 on the chart this evening. First of all, there is a bull bias going into this trading range. How do I know it's a range? Because we have double tops in a bull market. And again, you'll notice they're not exact double tops. They don't need to be double tops exactly. They just got to be close enough. Sure, you want to call this a triangle? Go ahead. Call it a triangle. It's a bull bias with a triangle. It's the same stuff. So it's a bull bias with a trading range. Okay, what does that tell me to do? It tells me to buy down here, right? Buy down here. Or I can buy up here on what? On strength. Okay, so bull bias to that trading range tells me to focus on buying opportunities below the range using the 2 try rule and seller failures. That prior month high, I see you, right? The Nasdaq is jealous right now that the Nasdaq can't get that prior month high. You'll see in a second here in the Nasdaq chart. That prior month high, wouldn't that be a beautiful level of support, right? Oh, what about this level? We saw how delightful those reversal lines work today. We talked about that last night, right? We talked about that reversal line at 53.5 last night. That was the key level. We talked about that 24 hours ago, right? Maybe we do it again tomorrow, right? 45 even. That's another reversal line there. And again, you'll learn more about reversal lines, these key reversal lines. There are 2 significant types of reversal lines. We got one of them right here. Learn more about reversal lines in that free trading course in the description. So we got a bull market. We want to buy at support below the low of that range. Support level, easy to create. That's my battle zone, and that's really where, right, I want to get long tomorrow. So we know we're bullish, right? I want to buy low, 1 try, 2 try. That tells me where stops are. I can buy into those stops, and then again, I don't chase after it. We don't chase after it. What do? Find that new channel. Draw up off that low, bingo, buy off that low, right? Buy off that low. That's always a tough part. The easy one is the failure pattern. The tough one is the pullback pattern, right? We got the failure, for example, right? The 1 try, 2 try failure, but the pullback was right in the middle of that range. It wasn't an easy trade to take at all, right in the middle. You want to focus on buying that low, right? So buying low, 1 try, 2 try. And again, I don't know how far we'll pull back. We might pull back to the prior month. We might pull back all the way to the 45. I have no idea, right? I'd be lying to you right now if I said I knew exactly where we're going to pull back. But I'll tell you right now, these two areas right here are looking pretty tasty. They definitely are, right? So one try, two try, failure, strength goes up, find that new channel, right? And we're buying off the low, right, of that channel. Or maybe we blast through here, right? Maybe we blast off up there. What do we need? Strength. How strong? Get the moving average up. Then what? Two-legged pullback. Again, you're using that prior resistance now as support, right? The key is, saw a good example from last night, right? The moving average never cleared above the high. So if we get that moving average up, I can then trust that two-legged pullback and I can buy it from there. What you don't want to do is try buying a pullback that looks like this. Because yes, it may break out eventually, but a lot of times what happens is it'll come crashing back down into that range, right? So avoid, right? Trying to predict breakouts. If you value the money in your account, right? Please take my advice on that. So we're buying low. Remember again, because the bull bias, right? One try, two try. I can't just sell the high. What I can do is I can take that short side momentum and I can sell up off that high, right? Using that new channel from there, right? Now, how do we reverse, right? What would a reversal look like here, right, on the S&P? We call it the 1, 2, 3 reversal or the 1, 2, 3 breakout. 1, strong move down. 2, pull back to the moving average. 3, strong move through, right? 1, 2, 3. 1, 2, bam, 3, right? Breakout. Okay, what you don't want to use is something like this, right? Strong move up, pulls back. Yeah, it looks pretty good, but all of a sudden it falls flat and comes back down. One try, two try. If they don't keep this sucker going here, right? If we don't keep going lower, this thing is going to fail. The momentum is bullish, and we're going to end up failure, pullback, and we'll end up right back up, right back up to retest that high again. Right, so remember, you want to see it one try, bam, big strong move. Find that new channel. I know it's tough to let it go without you, but you can't trust it any other way, right? If you think a strong move is enough to break out of a range, clearly you don't have enough experience yet, because we see these little strong moves all the time that go big strong move, and then of course they curl up into a ball and right back up into that range, right? So don't be naive. Those strong moves are not strong enough. You've got to get that second leg, right, to break out of that range. Good looking chart there, right, on the S&P. And here's a good example, right, of strong moves in the Nasdaq, right? How about that strong move? Surely that strong move must have been strong enough to break out. Nope, sold right back down into that range, right? Surely this strong move is strong enough to break. Nope, right back into that range. Well, what about this one? This one looks really, really strong. Maybe I should sell. No, do not sell this market right now. Look left. What is the market context telling you? Well, let's dig in. Nasdaq is bullish, right, into a trading range. This is the exact same range from last night's video. Get a measured move on top of that, right, as well as a support trend line on the chart this evening. The trading range has a bull bias. What does that tell me? It tells me to focus on buying below the low of the range using the 2-try rule and seller failure patterns tomorrow. While the support trend line, ooh, I'm loving on this support trend line right here. This support trend line right there. That support trend line coming off those recent lower lows will make for an excellent location, right, to look for, right, kind of a combination of levels of support, right? We got that trend line, we got that level there, we got this level here, this whole area down here looks really, really tasty, right, for those buyers. And again, right, I do want to point out, if we're successful going higher, that prior month high, right? Like I said earlier, the S&P already got their prior month high. The Nasdaq here right now is a little bit jealous, right? I would assume envying, right, the success of the S&P. Meanwhile, you've got the FANG stocks pretty much keeping, right, the Nasdaq going sideways right now instead of breaking higher. So again, market context tells me bull market into a trading range, right? Bull market into a trading range. That tells me what? Buy below the low of the range and buying at support. In last night's newsletter, we highlighted this area. Last night's newsletter, a key reversal line, one try, two try, up, trend line, back in. Is this not what I just described, right, a few moments ago? Right. So we saw that today. We talked about it last night, right? Same pattern for tomorrow. One try, two try, failure, strength, find the new channel, buy the darn pullback, right, and back up into that range. Again, it could be this level of support at 48 and a quarter. What I really hope, though, is I really hope this thing digs lower. We pull back. We see that failure, strength, find that new channel, buy the pullback, and back up in. I hope we get that nice deep pullback right down into that 74.40 area. Use that trend line. Use those prior swings. Get those sellers all excited about a potential breakout and run this sucker back up into that trading range tomorrow. So again, two try rule, buying off of those lows. Remember, we go higher here. One try, two try, right? We can't. What don't we want to do? We don't want to sell that, right? Yeah, we can't sell that. What we can do, though, is find that new channel. Now, why do I do this? Why do I do this? Because a lot of times what will happen is when you have a bull market in range, it'll go up, it'll pull back, try again, and then buyers are waiting here. So what's happening is buyers are waiting for a little trap, and they're going to buy that. So you don't want to fall victim to that. You're almost going to see what happened right here, right? Up. Right, buyers are waiting here to try to break it back up again. So you don't want to take that type of trade. It's not a reliable trade. You can do that on the bottom because your momentum is on your side. The market context, right, is on your side. If we do it above, I want to wait. Give me some proof, right? Get that momentum running back lower. That little bit of momentum is going to give us a lot more reliability. And again, the key is if you're going to sell this range in this bull market, you want to sell off the high, right? Off the high of that range. Be aware of selling too low, right, in a bull market. Not a good idea. And then, of course, don't forget, right, we got that strength, right? Strength, pullback strength for that breakout. Find that new channel. And we know what the target is. The target's up around that prior month high, up at that 75.30 area. If we break lower, right, strength, pullback, strength, right, if we really see these bears, right, put the hurt on these bulls tomorrow, right, if they run it low, we'll find that new channel, right, we'll sell off the high of that channel. And at that point, right, the Nasdaq's get the green light to go all the way back. We got some key levels here, 70, 73.87. We can keep going too. Right, it's been a hell of a run on the Nasdaq, right? If you look at the bigger picture here, we got some real good levels down here, right? We get some key levels of support down here that could easily be taken out, much like oil did today, right? So if this thing does get into a bloodbath scenario tomorrow, right, that will be our objective, right, going lower. But for right now, though, until we see a tremendous amount of strength that can hold a pullback on strength, yeah, we're looking for that strength, failure, and then back up right into that range. Buy low, sell high, avoid the middle. And again, if you want more examples of everything I'm talking about here right now, grab that free course. The description's below in the video description, the links in the description, or grab that information icon in the upper right-hand corner and get a much deeper dive that I can give you here right now on this newsletter. Oh, look! A range again. Here we go. Surprise, surprise. It must be the month of August. Gold is bearish with a trading range, a measured move, and a hidden channel on the chart this evening. The trading range has a bear bias to it, right? Market context is bearish. That tells me to look for selling opportunities using buyer failures and the two-try rule off the highs, right? And don't forget, this is a relatively wide range, right? So wide range, wide two-try. Big range, bigger two-try, small range, smaller two-try, right? The measured move, okay? That measured move around 32.2 combined with, we'll see if we can draw this up here, combined with, my tool, let me do it, good, with that hidden channel, right? So measured move and hidden channel, both lining up there right around the highs, right? Make no mistake about it. It's a range. The channel is not the most reliable piece of this, but it lines up beautifully right up in the top area of that channel, top of the measured move, up above, right, the high of that trading range. So most important clues right now, it's a bear market. That tells me one try, two try, failure, right? Failure into strength. Don't chase after it. Find that new channel, right? Grab that sell off the high. right? Remember, it's a large range, right? It's a large range, which means don't be surprised if it goes up, takes its time, goes up, right? It's a little bit slower to try, right? Again, bigger range, bigger to try, right? You can see sometimes they're very dramatic, right? When the range is very large. And also to remember, because of the bear bias, right? Bear bias, one try, two try. I'm not going to buy that failure, right? I'll look for the momentum going higher, find that new channel, and then I can be comfortably buying, right, on the pullback as we go back up into that range. How do we reverse? What's the reversal look like? 1, 2, 3, breakout, right? So 1, 2, 3, breakout. Strong move up, hold the pull back to the moving average. That'll give me new higher highs. I'll use those higher highs to draw my channel. I'll pull back, right, looking for that buy, right, off of that low. And at that point, right, boy, the target now, where's my target? Yep, back up to retest that high at 28.5, right? You can kind of see where this large range, right, is developing. So short-term momentum is definitely, well, short-term and long-term, right? Short-term and long-term are definitely bearish. This is the key range right now. I don't want to worry too much about the big picture. I'm a day trader. All I need is the last couple days to get a good picture of this. I don't need a daily chart, not when I'm a day trader. So I'm looking for that move right up so I can sell back down tomorrow morning. All right, pretty easy there. And again, bear bias, wide trading range. Sell off the high, be careful buying off the low because it's range bound with a bear bias. And again, the wide range tells me wide range, wide to try rule. Let's keep going. Last but not least here tonight is the euro. Euro is bullish with a spike in range pattern on the chart this evening, which tells me to look for buying opportunities at the lows and selling opportunities at the highs using that to try rule. As you can see here right now, bull bias, right? Now, this one's a little bit, it could be a smaller range here. I really debated about this. The range could be right here, right? That really could be your range. You go up, come back, up, back, right? That could be your range right there. I'm calling it the larger range just because I think that's the right, I think that will be the most reliable way to use it. So again, we're bullish. It's a relatively wide range. What does that tell me? It tells me buy off of that low or wait for that strong breakout higher before we buy off the highs. It tells me relatively wide range, relatively large to try, failure, strength, strength, pullback, pullback, back to the high. Right? To try failure, failure leads to strength, strength leads to pullbacks, and pullbacks will go back and retest that high. What does a breakout or reversal look like? Strength, pullback, strength, right? Got to keep going. Again, look what happens when they don't, right? One try, two try, failure, strength, pullback. I'm not making this stuff up, guys. These patterns happen over and over and over again. Right? In all markets, it's not just these markets. They happen in all markets, all time frames. This is just the Euro 2000 tick chart, right? Markets are fractals. One of the beautiful things about being a trader, you can apply this strategy to any market, any time frame. All you got to do is just get used to using it, and that's the goal of our trade room. Our trade room every morning opens up, and we trade this strategy right together. So one try, two try, failure, strength, pullback, back up to retest the high, or right? Strong move down. Now again, a strong move down does not guarantee a breakout. It'll pull back to that moving average. Show me you can hold this. Then we can look for that sell off the high and that target right back down to retest that low. But I'm telling you right now, you've got to see some strength, right? It's got to be one of those strong moves. Well, look at this way. Here you go. Look at the strength going higher here. Right? That type of emotion, that type of personality is what you're going to need going lower, right? The amount of the strength going higher, they have to do more of that to convince us to stop buying this thing when it pulls back. Now remember, as we go higher here, one try, two try, failure, no failure, take the pullback right off that high. I know I'm sounding like a broken record right now, right? But they're all pretty much the same strategy for tomorrow, right? Strong, strong, strong breakout. How strong? Strong enough to give me a chance to use that high, get that moving average up, fake out, breakout, pull back, use that high, right? Do not try to call, right, those breakouts before they happen. Wait for the breakout if you value the money in your account. And then where's my target going to be? My target on this point now will be this big measured move. Take that big leg up, back down there, right? The big target going higher here, right around that 17, we'll call it 17,050, right? 17,050, which lines up, not even close, right, to that big high off that euro. The euro is just a gold. It's been on a big time bear market over the past few months. All right, guys, got a good plan here for tomorrow. Buy low, sell high. You know the right patterns, right? It's a wide range, wide to try. It's all about market context when we have range-bound markets like this. All right, guys, don't forget, tomorrow morning, 8 o'clock Eastern time. Are you with me? Right? Will we get a breakout tomorrow? Will crude reverse tomorrow? I don't know. We're going to find out together. 8 o'clock Eastern time. We'll be in our trade room with all of our advanced members. Our advanced membership is by far our most popular course, right? It's been around for over 10 years here at School of Trade. I launched my trade room in 2008. Can you believe it? 10 years ago, almost 11 years from now, from then. It's incredible. One of the longest running trade rooms on the planet. Grab some more information on our website. Don't be afraid to get started as a beginner and then work your way up. I get a lot of clients who do that the right way every single week, right? And don't forget, if you have any questions, you can always hit me up on live support. You can always call my toll-free number right next to my ugly mug. Don't let that scare you, right? But call that, right? Call that toll-free number. I look forward to answering your questions, right? Helping you get started and getting to those trading goals, right? We all become traders for different reasons, but most of us, right, all the same reasons. We want to be financially free. We want to have the freedom to do whatever we want with our time, and that's exactly what I'm working hard for every day with my clients. Got a great free trial. Got that free class in the description of the YouTube video. Give me a thumbs up if you like the content tonight. Drop me a comment, right, if you have any questions. In the meantime, be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.